So where you don't make any declaration on salaries you have paid, that is a cost on the business. Then how will you claim it? We see there's pay this month, next month there's no pay, or the pay is going very low. It will trigger an audit.
Are your taxes accurate? Are your employees correctly classified? Are your statutory deductions being handled properly? Or are you just hoping everything is okay until KRA comes knocking? Welcome to HR Uncensored. I'm Juliet Gateri, a HR consultant with over 15 years of experience, and I help organizations across industries build structure, manage performance, and navigate complex people dynamics. Today, we are joined by Jesang Cherogon from the KRA Tax and Policy Division, bringing in clarity, insight, and practical guidance on what employers need to know when it comes to employee-related tax compliance.
If that casual is within the tax bracket, that person needs to be taxed.
Hi, Jesang.
Hi.
Welcome to HR Uncensored. Thank you. This is a conversation most people, HR managers, founders want to hear direct from the source. So before we start, I'll ask you a couple of questions, just some quick fire questions. Either a hire is a yes, a fire is a no.
Okay.
An employer delaying pay remittance, is it a no or a yes?
It's a no.
It's a no. And then hiring staff without contracts, is it a no?
It's a no.
It's a no. Assuming your accountant is handling compliance.
It's a no.
It's a no.
Yeah.
Okay. Okay. So let's start. I would want us, as a HR consultant, I get a lot of questions from both founders and HR managers when it comes to payroll. So I want us to touch a bit on pay deductions, casual workers, consultants. So maybe we can just start off on the payee side. So from the KRA side, what should 100% compliance on the payee side look like?
Proper tax compliance is about proper filing of returns and payment. And this should be done within the time provided for within the law. So those are within the due dates.
Yes.
So the filing due date and the payment due date. Mm-hmm. So you file your return and it has to be correct.
Yeah.
And you pay and it has to be the correct amount.
Okay. Yeah. So on the pay side, what we usually recognize, the most popular, is of course pay is deducted. Right. There's NSSF.
Absolutely.
NHIF.
Yes.
Housing.
Yes.
And not NHIF, but now it's called
SHA. SHA, right.
And then there's the housing.
Yeah, affordable housing levy.
Affordable housing levy. The one that usually people don't know is the NITA levy.
Ah.
Yes.
So that is under the NITA Act.
Yes.
And it has mandated KRA to collect on their behalf. Okay. So any employer with employees then supposed to remit 50 shillings for each of the employee. Yeah, and that is payable through the PAYE return through the Kenya Revenue Authority.
Okay.
Yeah.
Okay.
And it's an agency tax, or we can say agency fee payable by the employer. So KRA is just collecting on behalf of NITA.
So the employer is the agent who is the agent? KRA or
KRA is collecting on behalf of NITA, right? Okay. And the employer is the one required to pay. And it's not being deducted from the employee's emoluments. No, that is a charge on the employer.
Oh, so it's the employer that is paying for the NITA?
Yes.
Okay.
Yes.
Okay.
And the rate is already provided. It's per the head.
Okay.
Each employee, right.
So we are just going simple. So the exam is getting harder.
Right.
So the next one, casual workers. Do the same deductions apply to casual workers?
Now, the NITA Act has laid out who an employee is. And so the employer needs to align with that. And I think a casual is still an employee. I want to believe so.
Yes.
And so the same would apply.
Okay.
Yes.
Do all the deductions apply from payee? All the deductions, payee, NITA, housing, or do they all apply?
So for purposes of tax, now we'll look at the different applications.
Yeah.
Right. So for purposes of tax, it's emolument paid. So if if that casual is within the tax bracket, so within the threshold for which pay is to be deducted,
Yeah.
then that is that person needs to be taxed. The employer needs to withhold the
Yeah.
appropriate pay
Yeah.
and remit it to the commissioner.
Okay.
Then for purposes of SHA and NSSF, I believe the same will apply.
Okay. So even a casual, if we look at the pay that is required for employers to pay, so I would say it's between 715 to 800. So if a casual is paid daily, weekly, or monthly,
Right.
if it's daily, will we still have to deduct the same rates, amounts?
We have guided in our within the Income Tax Act. We
Yes.
have the pay rules, and it has guided on how an employer needs to account for such kind of cases.
Yeah.
So the employer is supposed to do proper accounting, and at that time you're making the payment to the employee, the
Yeah.
employee or the casual.
Yeah.
Then you need to determine if they have reached the threshold, then calculate the taxes and pay accordingly. Then the others would be accounting matters between you and the employee or your accounting.
Okay.
Yeah.
'Cause
But at the end of the month,
Yeah.
as the pay is required, because it is a monthly tax, then you should have accounted for the correct taxes. So if it is 1,500 per day for perhaps 20 days, then that is about 30,000, right?
Yeah.
So that is within the threshold.
Okay.
Then you should pay. Yeah.
Pay. Okay. What if I'm paying them daily? Do I still have to deduct? The confusion with most employers, especially those who are paid daily, let's say if it's a factory, either I can pay you via M-Pesa. So do I still, when I'm paying somebody via M-Pesa, do I still have to deduct the other items or remit something like NITA to the casual workers?
All that is a monthly,
Yes,
really.
yes.
It's a monthly pay, is a monthly return.
Yeah.
So it's upon the employer then to put out and, can I say, plan out their operations in such a way that at the end of the month, if that casual is within the threshold,
Yeah.
then the necessary PAYE taxes
Yeah.
is withheld
Yeah.
and remitted to the commissioner.
Okay.
Yeah.
Okay. So that's a key requirement.
That is a requirement, because when KRA comes,
Yeah.
just determines what was this person within the threshold within that period. Yes, were the requisite taxes paid? Yes or no?
Okay.
So that is it. And then perhaps the issue of SHA and NSSF,
Yeah.
we could perhaps put it off because it's KRA only acts as an agent, and we don't enforce. So SHA, the authority, and NSSF will be the ones doing the enforcement. For KRA, KRA will only collect where we have the mandate.
Okay.
Yeah. So
Okay.
perhaps we could put that off
Okay.
our conversation.
Okay, sure. So the next one is a consultant versus an employee. So when does somebody qualify to be a consultant, or based on KRA terms?
So consultancy is a contract for service, and an employee signs a contract of service. So it's usually a factual matter to be determined, and the courts have ruled. We have several rulings by the court, even the tax appeal tribunal guiding on that. And what the court will do, will use has been using some tests. So who has control? Does that person has autonomy to do what they're doing? Then that could be a consultant. But where an employer has control over that person, that person is an employee. Then what are some of the business realities? Say, are they being provided for with us an office space? Do they report to that office? Those kind of things. But a consultant is independent, is required to find their way to the place, to do that assignment and whatnot. But an employee is dependent on the employer, right? So there are some tests that have been used by the court to determine, and it's usually a factual issues.
Okay.
Yeah. So, so for an employer, then, or can we just say, this business person then needs to be very careful what kind of a contract they're signing. They can think they're signing for a consultancy just so that they pay a little amount of tax, that is 5%, while really the engagement qualifies for a contract of service.
So when you say control, so you've mentioned the person comes to the office, they're provided with tools by the employer for them to qualify as an employee and not a consultant.
Yeah, some of those items can be looked at.
Okay.
Yeah, even issue of benefit.
Yeah.
Is this person getting any kind of benefit from the employer, or the amount of money they're being paid as per the contract is for what you do? We don't care how you manage it, how you manage your expenses, how you come, whatever it costs for you to provide that service.
Okay.
Yeah.
Okay. Since we focused on the three main aspects of what employers should pay, when it comes to benefits, what type of benefits are usually taxed? Because most employers want to advance some benefits.
Yeah.
It can be a car, they want to give you a house, a car. So what type of benefits are usually taxed, and what are usually not taxed?
Yes. So for cash benefits, that forms part of the emoluments.
Okay.
So if it is cash you're being given as a benefit, perhaps it's for your mobile phone expense. It's cash money that forms part of the emoluments.
Okay.
Then we have non-cash benefits.
Yes.
Where the law has provided even a threshold.
Yes.
So up to 60,000 per month of non-cash benefits will be exempt from tax. So you don't have to pay taxes on such. And then we have motor vehicle, where somebody is provided for a motor vehicle. Then the law has provided a threshold, say 2% of the cost of that motor vehicle.
Yeah.
Then it forms part of the benefits.
Okay.
Yeah, so it determines if it is housing. Again, the law has guided how you determine that housing benefit. It could be the market rate, the amount of money that you're deducting the employee for purposes, because sometimes it's lower, sometimes it's and then there's the a percentage against the emoluments that person is getting. So whichever is higher, then the commissioner will take it as a benefit.
Okay. So any cash benefit, bonuses, anything I give my employee in cash, it's taxable.
That is taxable benefit.
Okay. Does per diem also include as a cash?
The law has guided on per diem.
Yeah.
And it has given a threshold. And then where an employer has a policy that the commissioner is agreeable with, again, it's a matter of looking at the substance of it.
Okay. So as we move on, most employers, especially people who manage more than 1,000 employees or more than 500 employees, they usually want to give away that responsibility of managing payroll. So who's this outsourcing part? So who's responsible for the employee? Who's in control and who pays now the taxes? Is it the employer or the company that's doing the outsourcing?
So that will depend on how that contract looks like.
Yeah.
Because you can give somebody else to look at the pay matters, but then you can have a contract where this outsourcing company gives you the employees. And the contract would actually even say you will pay them the salaries, you will deal with their statutory deductions. So depending on how the contract is laid out, then the responsibility can fall on either of the parties. So where the outsourcing company is given the mandate to get the employees and will have to pay them and deal with all the legal matters as per the labor laws, then all that responsibility should be on the contracting company.
Okay. Okay. So we've talked about pay. That's probably permanent staff members, casuals as well, and then consultants. When it comes to compliance, especially I think in Kenya we have businesses that run in a formal structure and others are not in a formal structure. So how do we encourage, as a consultant, how do I encourage my clients to be compliant? How can I, especially when it comes to casual and pay, how do I encourage them to be more compliant?
No, the commissioner, let me just say, then the act requires that any kind of expense should be supported by e-TINs.
Yes.
Invoice. So it should be submitted or electronically to the commissioner. And at the end of the year, you can only claim such kind of expenses.
Yeah.
But then that provision has exempted issues of employment expenses because those are payroll matters. So where you don't make any declaration on salaries you have paid, that is a cost on the business. Then how will you claim it at the end of the year? So it is important. So where you have employees, make your return, declare all of them, even those ones below the threshold, because that is a record, a declaration you're making to the commissioner that you have incurred these expenses, right? So then you're able to claim. So it is important that you make such kind of declaration.
Because if I give somebody cash, I'm not able to claim that as an expense in the business.
Yeah, you are not able to.
Okay. You've mentioned a lot of commissioner prescribes this. So what does that mean?
So in this conversation then, we mean commissioner would be any officer of KRA as mandated in the Act. So it's the action of the authorized KRA officer.
Okay.
Yeah. So perhaps you could use the term KRA, that KRA can assess you, KRA can...
Okay. Okay. So I want to go back on the consultant side. So some organizations, especially, I'll talk about maybe marketing agencies, a HR company like, what we do. We sometimes have consultants who can come in for a short project, maybe 6 months, sometimes 12 months, but they're working as consultants. They have their own tools and everything. We will remit the 5% withholding.
Right.
But June comes and they have to do end of year returns. So what are they supposed to do?
Yes. So I will still go back.
Yes.
And right now we are requiring any person in business to issue an ETR receipt. So I am expecting that this consultant is issuing an ETR receipt for which then when you're making the payment, you're withholding the 5%. So the 5% is literally an advance tax. The consultant then needs to declare the income, the total income in that year, and claim allowable expenses. So these are expenses in line with the business that they are doing. And then they should be supported by ETR receipt. And then whatever is then the profit or the surplus out of it, then that is what is chargeable to tax.
Okay. Yeah. And on the pay side, what are the employees supposed to do, both the permanent workers and the casual, when they are doing the annual returns? What key things should they do?
Ideally, any employee or any person earning some income should be very keen on their payslip so that they can ensure the correct tax was deducted and that the total amount of money they received in that period has been declared, then they need to have a P9 form that is requirement. So the employers are supposed to provide this by the end of the second month of the following year. So by end of February, you should provide that to your employee. Right.
Yeah.
So that shows all the amount of monies that was paid to this person, the amount of taxes that were withheld, and any other benefit, reliefs, and deductions that were applied on that particular emolument.
Okay.
Yeah. So, and then when they file the return, nowadays the iTax is pre-populated. Then you need to verify the whatever is within the commissioner's iTax corresponds with your P9. Yeah, if there is any discrepancies between your P9 and whatever is pre-populated, it is advised that you consult with your employer. Yeah.
Okay. There's this general fear. I'll just, the business owners, even HR managers and other managers, they fear approaching KRA if sometimes they don't know what should I do, especially when it comes, pay is very direct. Consultants is also very direct.
Right.
I think the biggest issue is on the outsourcing part and the casual staff. So what can employers do for them to ensure they are compliant? Can they come to KRA? Is there a department? Is there education online?
Right.
What can they essentially do? Yeah.
There's a lot that KRA is doing, and we have a lot of material within our website, our media platform, or social media platforms. There's a lot of information. Other than that, any new employer, or we can say a taxpayer that has taken on the PAYE obligation, the KRA usually invites such new taxpayers for training. And you can also come to KRA, ask for training, ask for assistance, and that is always given. So, and the other bit we can even advise is that some employers are able to get professional advice, but then we would advise that they get from credible tax advisors, or if it is an audit matter, get a credible tax auditor. Yeah, and ISPAC has helped in that.
Yeah.
We have
there's a
those
list.
registered. Yes. Yeah, so they can make use of such kind of services.
Okay.
Yeah.
From just general KRA analysis, what's in terms, when it comes to payroll, where are employers making the most mistake?
In payroll?
Yes, payroll.
In payroll?
Yes.
We note some recharacterization of payments.
Yes.
So that you have an employee, but you don't want to declare everything, or you characterize this person and say they are a consultant while they are an employee. Yeah, the other bit is not giving these employees all the applicable reliefs, tax deductions, and where exemption applies, you don't allow for such kind of exemptions.
Okay.
So that then affects these employees' tax filing, or even their tax liability. It will seem high, while if the proper or applicable reliefs and tax deductions and where exemption applies was taken into consideration, then the tax would have been fair on that person. So those are some of the things we see.
Or recharacterization.
Yes.
Okay. And what happens to an employer or an employee when the employer doesn't remit the pay or even NITA? So what will essentially happen?
KRA usually enforces the law, and the law has guided that where you are an employer, you need to deduct and remit, and it is within a time. So by the due date, you need to have filed and paid. So where you an employer deducts and fails to pay, then we expect that there will be tax, there will be some implication because there will be late payment of taxes and late filing. And even when they fail to file, then again, there's also that penalty.
Yeah.
And then there are interests that also apply for late payment.
Okay.
Yes.
So that's one of the things that triggers an audit on the payroll side.
On the payroll side,
Yeah.
there are a number of things that can actually trigger, where in most cases, an employer is expected to have employees, and the trend should follow, really. But where we see there's pay this month, next month there's no pay, or the pay is going very low, then it will trigger an audit just to verify, is this situation the right thing? Perhaps it is, but then it would trigger an audit. And then under declaration, and then sometimes we have third-party data. So where it's not following.
It's not aligning.
It's not aligning. Then even where an employer then is not remitting, you're filing and not remitting. What is the problem? Yeah.
Cash flow sometimes.
Sometimes it's cash flow, right?
problems, Yeah.
Yeah. That again is understandable. But then there's an obligation.
Yeah. And it's not your money. You've already deducted from somebody's
from
payroll.
somebody's. Yes.
Okay. And taxes are dealing with expats. So do we deal with expats the same way we deduct payee, or are there other things that are different from expats?
This you're meaning expatriates?
Yes, expatriates.
Then it would still apply, but some other provisions of the law may take course. Yeah. And then we have the DTA, depending on where that person is.
Or double taxation?
Yes, double taxation agreement.
Yes.
So for what period is this person here?
Yeah.
Yes, it is chargeable to tax. Can we term them as a resident of Kenya or not a resident of Kenya? And so the tax, it has very many factors that need to be considered. Yeah.
Okay. But the first instance is they're treated the same way as a Kenyan, a citizen.
Yeah, but then they will not enjoy some of the reliefs. Yeah.
Like which one?
If you're not a resident, because the relief, tax relief is on a tax resident, right?
Yeah.
Then if they're not a tax resident of Kenya, they will not.
They do the same benefits. So most expats are given houses and cars. So the same tax applies, whether it was a Kenyan citizen or a non-citizen.
Yeah, if it is employment income being paid by the Kenyan employer, then all the laws will follow.
Okay.
Yeah.
Does KRA prescribe a certain salary level, or that's up to the employer? That's not your mandate.
No, it's not within the KRA.
It's not the KRA mandate.
It's a business decision, perhaps.
Okay.
Yeah.
Okay. That's okay. Maybe what the next steps, I'm a business owner. I've just started a business, or I've been running a business, but I've been giving my employees cash.
Yeah.
So what steps do I need to take to now start being compliant? Do we now go back? The cash, the way I was giving people cash, do we now go back to that? Or what would you prescribe for me to be compliant? Like, I want to be, Juliet is here, I want to be compliant.
I want to believe cash is not the problem. Yes. Sometimes what some business do with cash then is to avoid visibility, because that is a challenge even for KRA, because if it is cash, if it is M-Pesa, and those are some of the things that some taxpayers would do. You don't want to pay, you pay through cash so that to avoid visibility. But then for a person willing to then comply, then you need to ensure that you file the required returns within the time that is set for the filing the return, and making the correct payments at the correct time, and making the correct declaration. And when we come to employees, who are they? Are they employees? Are they consultants? So make a proper declaration. I think I would say that.
Yeah.
Mm.
Okay.
Yeah.
So I think one thing I've forgotten probably to ask, people who work on commission only, how is that taxed? Do we do the same way as we do the other payee or cash cash payments? So for example, I work in a salon or a barber shop, and I'm paid, let's say, 30% of the customers that I'm handling. So how do I tax that?
That's a trick question.
Yeah.
Then again, we go back. Is this a consultant? Is this an employee? We agree it's an employee.
Yes.
Then whatever money, whatever emoluments you pay.
Yeah.
Because now the law talks about salary, wages, commission, even gratuity, and any such kind of payment towards that contract of service, then it is an emolument that should be chargeable to PAYE or to tax, right?
Okay. So if I'm running a spa or a salon and I have people I pay on commission, so I should declare that. So at the end of the month or the week, I would say these people paid this, I do the deductions, and then I remit to that.
Yeah, they are your employees.
Yes. Okay.
Yeah, then that would follow.
Okay. Probably the last question, I really want to focus on the payroll aspect.
Right.
When it comes to gratuity, service pay, and retirement, the final payments that you're given in lump sum, or even pension payments.
Okay.
So all the three, who's responsible? Is it the employer, the employee, and how is that deducted? How is the tax for those cash payments, cash or non-cash payments?
So you're talking about severance pay,
severance pay, yes,
gratuity,
yes,
all those,
yes,
are the responsibility of an employer.
Yeah,
because it is against an employment contract.
Yes,
so it is the responsibility of the employer to do the proper calculations, provide the correct deductions if there would be applicable or reliefs, and then remit to KRA.
Okay.
Yes.
And pension?
Pension, I think the law has changed now.
Yeah.
That pension is not chargeable to tax.
Yes.
Yes.
Oh, wow. I didn't know that.
Yeah. And then gratuity also, but then it depends. Only that which is earned after the law changed. I think it was in July, starting July 2025, right? Yeah. So only that which is earned after that time, then...
After 2025?
After 2025. Remember, gratuity is on the year of service. You're not just paid now, but it's in relation for the period you have worked or served that particular employer. Okay. So it's deemed to have been earned over that period. Yeah. So if your contract started, say, after the law changed, then it would be exempt. But for that period prior to, then the law on taxation of gratuity applies. Yeah.
So if I received my gratuity in January 2026, I will not be taxed for that.
If it is in relation for
the period from 2025
going back, perhaps part of it will be chargeable to tax.
Okay. So so we'll split it into two. I'll be taxed for the amount previously?
It is a period. So let's give an example.
Yeah.
You've worked for an employer A from, say, 2022 to 2026, where the contract then ends. Yeah. And perhaps you renew it, we don't know. So the period 2022 to June 2025, that period, gratuity was chargeable to tax. And this gratuity you're being paid is for that period of service, that period of that contract. So we will spread out this over this period, and then whatever falls for those 6 months, then will not be chargeable to tax.
Okay.
Yes.
Is gratuity the same as severance pay?
Severance pay is more of last dues,
Yeah.
where the employer looks at, I think
There's a big
Employment
difference
Act,
between, we'll
because
explain.
gratuity is almost in the place of, in lieu of pension, then the employer chooses to pay you gratuity. Yeah.
Okay. Sawa sawa. Okay, I want to do the last quick fire questions
Oh la la.
as we close. Just
Not
2 or
good with
3.
those ones.
No pay slips for employees, hire or fire.
That's a fire.
That's a fire.
Yeah.
Late filing of returns every month.
Oh, fire.
Fire. Blaming accountants for tax issues.
Neither here or there.
In between. It's somebody's fault.
It's somebody's fault. Yeah.
Okay. The last one. Ignoring compliance until KRA reaches out to you.
Oh no, that's a fire.
That's a fire.
Don't wait for fire to come.
Okay. As we close, I know a lot of people really, really want to comply. Is there a simpler way of going about it? Because every time somebody hears the word KRA, you shake. Right. So is there a simpler way of just doing it for just people to stay compliant?
In the context of
Employers, yes. And even employees.
KRA has provided a number of platforms within which somebody can use to file their returns or even make the payment for taxes. Like right now we have Shuru that is on WhatsApp. So it makes it easy for employees and any other person earning employment income to file their annual return.
I think there's one behavior aspect I've seen. Why do we as Kenyans file our taxes last minute in June 30th? We are the ones who run now to start filing.
I'm not sure.
Yes.
And does not only apply to taxes.
Yeah.
Even find students that need to apply for student loans or even a parent seeking to apply for a school for their children. Sometimes they wait until the very tail end, right? So I think it is a behavior
issue.
Yeah, it's a behavior issue. It's our, I don't want to call it our culture, but I think we are seeing it changing.
Yeah.
And the way KRA is doing, we are doing a lot of outreaches, using the various media to ask the taxpayers, can you file your return as early as you can, so that we avoid
delays.
Delays and even
queues.
And long queues. And sometimes, like last year, we had issues with the system. So any person who filed early did not have a problem, right? So, KRA is trying to do it. Yeah.
Even for PAYE, I see a lot of people doing it late.
On the 9th.
Yes.
On the 9th.
The exact date. And then systems go down because all of us are trying to file. Yeah, to file.
But KRA has tried. Our systems have been stable for some time. But we hope to see improvements.
Okay.
Yes.
Okay. Thank you very much. This has been an educational topic. I think my biggest takeaway is the WhatsApp. If I have any questions, that's the right platform. It's the easiest way than coming to the office.
Absolutely.
Yes.
Absolutely.
Thank you very much. This was very educational. Thank you very much.
And KRA is always available to help any person. And perhaps where we have the TCC application.
Yes. What's a TCC?
Tax compliance certificate. That can also be an avenue that our taxpayers can actually use to determine whether you're compliant or not. You know, you need to check your compliance status every now and then.
So I can just self-report and say, I want to check whether I'm compliant.
And that facility is available on iTax. So if you're compliant, you automatically get your tax compliance certificate for that particular year. And sometimes you can visit KRA and ask, would you do a review of my accounts? Yeah. And they can do a health check for you. Okay. And even using professionals can help to maintain
your health
compliance.
Status.
To maintain your compliance, not to wait until KRA comes, because there's a lot of, it costs much to not comply. and the cost of having to hire a
tax
person,
consultant to help you.
yeah,
It's also costly.
to deal with the audit queries and all that. So you can save much more by ensuring that you are compliant every now and again.
Okay. Okay. That's reassuring. Thank you very much for this conversation. We hope everyone will start being compliant and stop fearing that KRA is after you.
No, KRA is for...
It's for everyone.
Absolutely.
Thank you very much. This episode is brought to you by Alternate Doors, your HR business partner.